The best proven way to trade price action is to trade price action patterns. Here are the trades that I took this week trading the short patterns. And in this video, I will teach you top 4 price action patterns you must know. Please don't forget to like this video, subscribe to my YouTube channel, and let's start. The best proven way to recognize the price action pattern is to draw the so-called impulse tags. So when you analyze the chart, simply draw the impulse tags. It will help you to precisely spot how the price moved, and it will be easier for you to spot the price action pattern. Analyzing the price action right here and zooming in the chart, we can see that over here, the price formed a very peculiar formation. You can see that the price was growing, and over here, the price was testing that resistance multiple times. And you can see that here, the price formed 2 equal highs. And at the same time, the price formed right here, the higher low. That is the classic example of a double top pattern, a classic reversal pattern. The main elements of the double top are 2 equal highs and the higher low between them. And that pattern is the reversal pattern, and it signifies the exhaustion of bulls. And even though many traders trade this pattern just once it is formed, you should remember that this pattern gives you a bearish clue only when the price breaks and closes below its horizontal neckline. So once the neckline is broken, you expect a strong bearish movement. Hey traders, learn technical analysis with my ebook. If you want to learn price action trading, structure trading, top-down analysis, candlestick patterns, risk management, and trade management, you will definitely enjoy that. You can look inside the book on my website. It is vasilytrader.com/ebook. Check that and let's continue. The opposite is true for a double bottom pattern. Analyzing the price action right here and following the impulses, we can see that once the price reached that support, we set 2 equal lows, testing that. And at the same time, we have a very nice low high between them. Here we have a perfect example of a double bottom pattern. And it is the classic reversal pattern. And its neckline breakout can quite accurately indicate a highly probable bullish reversal and bullish continuation. Now let's discuss one more very accurate price action pattern that played out nicely this week on a pound dollar pair. Again, first let's analyze the price action. Let's check how the price acted, and let's try to identify the most important price action legs. Here you can see that the price set 2 equal lows, and at the same time the price was setting low highs. Here we have a perfect example of the descending triangle formation, a classic reversal pattern. And the descending triangle is the variation of a double top. You can see that first the price formed a double top right here, but then instead of falling, the price set one more low high and only then violated its neckline. Once you spot the ascending triangle, after a strong bullish impulse, you can wait for a bearish breakout of its neckline as the trigger. Once the price breaks and closes below its neckline, it usually gives you a very strong bearish signal. And you can see how nicely the market dropped today after a retest. The opposite is true for the ascending triangle formation. After a strong bearish impulse, monitor the price action. If you see that the price keeps setting higher lows, respecting the same resistance, it is a classic example of the ascending triangle formation. That pattern is also called the bullish accumulation pattern. And the trigger that you should look for is the breakout of its neckline to the upside. Once the price breaks and closes above that, it quite accurately indicates a highly probable bullish reversal, and quite often then a strong bullish impulse follows. The next pattern that we'll discuss is called the range, the decision range. Again, let's analyze the price action here on silver. You can see that the market was growing nicely, but then we started to consolidate and we started to trade within a very narrow trading range. Yes, you can see that the price was setting equal highs and equal lows. And here we can easily identify the upper boundary of the range. And by the way, the boundaries of the range are usually the zones. And right here you can see that I underlined quite wide area being its upper boundary. The lower boundary is the zone as well. Yes, here it goes. And the point about the range is that within that range we can easily spot a double top. Somewhere here we can spot a triangle. The fact is that the range is simply the extension of a double top or the triangle. And it usually tells us that the market is too weak and that it cannot break the resistance of the range or the support of the range. It just consolidates and the market participants are deciding where to push the market next. And while the market is consolidating within that horizontal range, respecting its resistance and support, trading volumes are accumulating, and everything depends on the breakout of the boundaries of the range. Then, if we see a breakout, a bearish violation of the support of the range, it gives us a very strong bearish signal, and then we expect a strong bearish continuation. And if we see a bullish breakout of the range, it gives us a very strong bullish signal, and then we expect a strong bullish wave to the upside. And the main thing about the range is that we don't really care whether it was a strong bullish impulse before the range formed or the bearish impulse. While the market is ranging, we don't know where it will go next. And only the breakout, not the current market trend, not the previous impulse leg, but just the breakout indicates the future direction of the market. Take a look at the price action here on New Zealand Swiss pair. We were trading in a strong bearish trend, but once that structure level was reached, we started to coil. You can see that the price formed a double bottom first, but then it didn't manage to violate its neckline and it kept coiling, and the price formed a horizontal range, a decision range. And even though the trend was bearish, the range was broken to the upside. And you can see that after the breakout, the market started to grow sharply. So not the previous trend, but only this side of a breakout quite accurately help you to predict the future direction of the market trading the horizontal range. And now let's discuss the last and my favorite price action pattern. But first, let's analyze the price action. Remember, traders, that in order to identify the price action pattern, you should analyze the impulse legs first. Because only when you recognize the impulses, you can easily spot the pattern. So you can see that analyzing the price action, here we got a very strong bullish impulse. The price set a higher high, retraced and set a higher low. Then we bounced, we set a new higher high again, but then we dropped and we set an equal low. We bounced, we set a low high and we dropped again. Here we have a perfect example of the head and shoulders pattern. And head and shoulders pattern is a variation of a range. But head and shoulders pattern by itself is a very bearish pattern. And once it is formed, you should spot its neckline. Yes, and the neckline is based on the equal lows of the pattern. The pattern is bearish, and we trade the breakout of its neckline to the downside. Once the price breaks and closes below its neckline, it gives you a very accurate bearish signal, and then most likely the market will keep falling. A bullish version of head and shoulders pattern is called the inverted head and shoulders pattern. And the first element of this pattern is a strong bearish impulse. The price drops and the price sets a level low. Then the price retraces, sets a level high, and then drops again, setting a new level low. But then the price suddenly bounces and returns back to the previous high, setting an equal high. The price drops, sets a higher low, and returns back to the equal highs. That is a very bullish pattern. And the trigger that you're looking for is a bullish violation of its horizontal neckline. Once the price breaks and closes above that, it gives you a very strong bullish signal. Being an expert in price action patterns, you can profitably trade forex markets, stocks, commodities, and cryptocurrencies. And these 4 patterns are extremely profitable, and I really want you to try them. If you want to learn these patterns, don't forget to check my premium course. It includes the ebook and video course, the link in the description below. Also, traders, if you have any questions, let me know in the comment section. I always reply. Also, let me know what do you want to learn in the next videos. Traders, please like this video, subscribe to my YouTube channel, and I will see you next week. Thank you so much for watching.